Hi guys, I'm VP. In this video, we are going to see all about gold as an investment, gold as an emergency fund, and what are the various way we can invest in gold, and my final conclusion. Okay, let's get started. At first, we should be so clear why we are buying gold. There are three reasons for buying gold. The first one is to beat the inflation. If you are keeping our money in cash, then over a period of time, due to inflation, our money may lose its purchasing power. So that we should convert our money into gold. In the long run, gold will protect our money against the inflation. Okay. The second one is hedging for our portfolio. If we have equity portfolio, bond portfolio, then in an uncertainty situation or a geopolitical war, we may have a severe loss in our equity and bond portfolio. At that panic situation, everybody tries to buy the gold so that the price of the gold increases and it may act as a perfect hedge in our overall portfolio. The third one is luxury ornament. We can make a gold into a chain or ring and we can wear it. While buying gold also, we have two choices. One, physical gold, and second one is digital gold or paper gold. Okay. The first one is physical gold. The physical gold has no boundaries in the world. You can buy physical gold from India and even you can sell that gold in US, Europe or any part of the world. But the gold which you are buying as digital gold or ETF or SGB, it has a boundaries. In India only, we can sell that and make it money. I'm saying this in a worst case scenario. If India defaults, then our SGB or ETF, whatever we are having as a digital format, may have not value for it. But our physical gold will have value in the world. Okay. As I said earlier, our mindset should be we are buying gold to protect our money against inflation, and if there is any uncertainty in the world, then we may have tend to see a drawdown in our equity and bond portfolio. At that time, gold will act as a perfect hedge for us. Okay, this is our mindset while we are consider buying the gold. Okay, now let us see in what are all the various types we can buy the gold. The first one is classical one, the physical format. The second one is gold ETF and mutual funds. And third one is sovereign gold bonds, that is SGB. And fourth one is digital gold. In this video, we are not going to talk about the digital gold because in India there is no regular authority. The proper rules and regulation the company should have while receiving the digital gold or stuff. Okay. In that sake, we are going to avoid it. And we have the main three options. The first one is physical gold, and second one is ETF and mutual funds, and the third one is SGB. Okay. As we seen before, we are having the main three ways to buy the golds. That is physical gold, mutual funds, ETF, and the SGB. Okay, now let's see in the elaborate way. Okay. Before we are going to see buying gold, now let us see some facts. Okay. In India, the mined gold was just 1.6 tons of gold in 2022. But you know what? We are consuming around 774 tons gold per year. That means India is producing just 0.21% of the uh, gold in each country. Okay. Remaining 99%, India is importing the gold from the other countries. Currently, India has three working gold mines. That is Huti Uti mines in Karnataka and Hirabundani mines in Jharkhand. Okay, we have almost 11% of the gold that is existing in the total world. And the Indian households have 11% of the gold that is combined of more than America, Germany, and even IMF. Okay, it is roughly around 1.5 trillion dollars as of 2021. And you know how much kg gold we have? We have 1 crore 70 lakhs 90,601 kgs of gold at till 2021. Now there is a difference between other countries' gold price and India's gold price. It is mainly because of the taxes. Okay. Now let us see what are the taxes we are paying. The revised tax was at 1st July 2022. Before that, we are paying less tax, but after 2021, after 2022 July 1st, we are paying some extra amount of tax. Okay. Now let us consume. If we are buying 1 lakh of gold in other countries in the same quantity, but that same quantity of gold, India we should pay around uh, we should pay around 1 lakh 18,450. Now let us see what are the taxes we are paying. The customs duty tax we are paying around 12.5 percentage of this 1 lakh, that is 12,500, and it is called cess. Agriculture and infrastructure cess we are paying around 2.5 percentage, that is for 1 lakh, that is 2.5 thousand. If we combine the both, then we are arriving that 1 lakh with the tax and cess we are paying is around 1 lakh to 15,000 rupees, that is 15 percentage of tax. And we are paying, and upon the tax we are also paying 3% of GST, that is for 1 lakh 15,000 rupees, the 3% is 3,450 rupees. Adding to up it comes around 1 lakh 18,450 rupees. We are buying the gold. Same amount of gold for one lakh in other country cost us around 1 lakh 18,450 rupees. We are roughly paying around 18.45 percentage of money just for taxes. And then we are buying the gold in two formats, one in gold bars and another one is gold ornaments. If we are consider buying the gold as an ornament, then we should also pay extra for their making charges. that makes our gold too costly for its value. Okay, if for us the second option we have is ETFs and mutual funds. Okay, now for the index fund I choose Nippon India Gold Savings Fund. It is a mutual fund. It is a gold mutual fund. Okay, if we see down here, the mutual fund will invest their money in the exchange traded funds. The mutual fund itself will have a ETF, that is exchange traded funds, and they will invest their 99% of the money in that only. The company name for the ETF they are having is Nippon India ETF Gold Bees. We can invest our money in this mutual fund, or in the ETF they are having. The ETF, let me show you. It is a ETF they have. It is called the Nippon India ETF Gold Bees. If we go in our broking account, if we search for gold bees, then we will have the Nippon India ETF Gold Bees, and we can select this, and it will appear, and we can easily buy or sell it. Okay. The main difference is, we, the ETF we can buy. The ETF will have a varying price from till 9:15 to 3:30, that is market timing hours. But the mutual fund will have a fixed price throughout the day, so that we can buy it. If you are going to invest a lump sum amount or a systematic investment plan, then mutual fund investing is a very good one. But if you are seeing any opportunity in gold, that is, if the gold corrected by 2%, 3%, now you want to buy, then ETF will be the best option. Okay. The third one we have is SGBs. SGB is nothing but the sovereign gold bonds issued by the RBI itself. But the thing we should know is, for SGB we are investing, there is no physical gold is actually backed up by the government. It is just we are investing our money by having the trust of the government and the issuer RBI. In SGB, an individual can even invest from 1 gram of gold to 4 kg of gold. The thing is, government will issue 2 times per year. The pricing of the SGB is, if the 1 gram of gold is trading today, let us see 4,500, then if you are buying 1 unit of bond, then our price will be 450 rupees only. We will have a 50 rupees discounted price. The main things we should know is, we can get around the fixed interest of 2.5% per annum and we can also have the potential upside of the gold prices. Okay, let me explain. If we are buying 1 gram of gold for 4,500 rupees, then if you are going to exercise the bond after 5 years, now let us consider the bond. Now let us consider, for 1 gram the gold is trading around 5,500 rupees. Then for 5 years it made a profit of 1,000 rupees in the gold appreciation. Then for 4,500 rupees, 2.5% of interest the bond issuer will pay for us, so that we can enjoy that return also. Okay, let me conclude this video by saying that everyone should have gold in their portfolio. The main two reasons are: first one, we should protect our money against inflation, and second one is, if there is any uncertainty happened, then our gold investment should be a perfect hedge for us. Okay, my advice is for buying gold for you is, if you are a small investor, then I prefer you the option of ETFs. And if you are going to invest the gold in an SIP way, then mutual fund will be a best option. If you are going to buy the gold in a lump sum amount, then wait and buy the SGB bond. You can see the details of the SCB bonds in the RBI website itself. They will issue 2 times a year, so that you can do your bulk investment, and in the long term you can enjoy the appreciation price of the gold as well as the 2.5% of interest to that amount we are investing in the gold bonds. In the next video we are going to see all about the index funds. Till then, stay tuned. Thank you.